because once you retire and your income from your job is gone, then that whatever you have in that retirement account or how you approach it, that is going to really determine how you live in retirement. And by approaching it, I mean maybe looking at that retirement account, learning how to generate income off of it, and then also to grow it and protect it at the same time.
We alluded to the fact of how fees can really it's devastating to
Hmm.
retirement accounts. As Al talks about every single week, it's like having a bucket filled with water, but having holes in that bucket, and those holes is basically draining the fees and the capital out of your retirement accounts. Now, more and more people are seeing that those fees are there because I've had some conversations with some friends recently where markets have been up, but their accounts haven't really done a whole lot. And a lot of times it's just the contributions is what's getting a lot of
Sure, that's right.
the action in the accounts.
Hmm.
Now, what are how does that happen? Like, why are these fees so high for one? And people think, well, I only get paid a 1 or 2% fee. That's actually very high. Why are they so high? And what are some of the things that we can do as an average investor to potentially lower or even eliminate those?
Well, most people, whatever they think their fees are, they're probably really underthinking what they are. They're probably much higher than you think. But think about it. If you're in mutual funds, what kind of cost do the mutual fund companies have? Do you think that a mutual fund manager is a minimum wage job? Far from it. They're probably in the, maybe in the $1 million plus range. They don't work alone. They have teams of people. Oftentimes, when you see ads, you'll see a group of 4 or 5 distinguished-looking people are standing around. They're making these decisions.
Great commercials, though.
They're all
Oh
getting
boy,
paid. And by the way, who do you think's paying for the commercials?
their clients.
Their clients are. So, there's legal fees, administrative fees, transaction fees, the marketing fees, the things that you probably never see that add up. So, some people think, well, I'm only paying around a percent or maybe 0.75%. That's really on the low side. When you look at the all-in cost, it could be closer to 4 or 5%. But what are you getting for that kind of fee? Let's just say it's around 2%. Let's look at that as kind of an average. Over the course of your working years, that might cost you 40 to 50% or more of what you could have in your account. That's a big number. For some people, that could be several $100,000. Well, in the problem is that you also are being put into an investment asset that has mediocre returns. Mutual funds are so spread out that oftentimes the upside potential is muted. And certainly the downside potential, the downside hit is muted also. But on the upside, you're missing out maybe on some of the potential returns that would be more likely possible if you were managing your own assets and had access to maybe some of the leverage assets we talked about or individual stocks. We're seeing a point in time now where the markets going forward are probably going to be kinder to people that are investors, that are stock traders, that know how to make individual decisions, not based on something like a mutual fund or a much larger all-encompassing type of a thing, maybe even an index fund. The S&P 500 is made up of 11 different sectors that cover pretty much every part of the economy. Well, you think about it, not all of those 11 sectors are going to be performing well at one time. There's obviously going to be some that are underperforming significantly. So maybe being able to identify the better performing sectors, maybe based on a strategy that shows you where the buyers and sellers are, maybe that would give you an opportunity to kind of boost the returns on your retirement accounts. Because once you retire and your income from your job is gone, then that whatever you have in that retirement account or how you approach it, that is going to really determine how you live in retirement. And by approaching it, I mean maybe looking at that retirement account, learning how to generate income off of it, and then also to grow it and protect it at the same time.
Well, just to give another example of that 1 or 2% fee that people are paying. I mean, let's say someone's in their 50s or their 60s. That's still earning potential in their working years. That's a potential of tens of thousands of dollars they're missing out on
Sure.
in retirement. Now think about that. If you're missing out on that, that's a whole different lifestyle. So, Al, as we kind of continue this discussion about retirement and fees, there's a lot of, I guess, average investors, we'll call it, the public, that they're not really in the market, but they are invested in the market with 401ks and
Right.
IRAs. They are in the market, but they are more, it's more of a passive. They let their guy or they let their gal take care of it. And some of them, they, feel they're good friends, right? But the fact of the matter is that's a business. That business has to create return, or they have to make money in that
Sure.
business
They got a bottom line to deal with.
as advisors, right? So they have their best interest. Now, how does one get started? Say somebody does want to self-direct their own accounts, have their best interest in their future, and really take that over. How does somebody do that?
Yeah, well, coming to one of these classes is a great way to start, and we'll help you go through, what the steps are to be able to do that. But it starts with understanding that you don't have to just put money into your employer-sponsored retirement plan. Certainly you want to put money into it to get the match that's there, but once you've reached that level, any additional money you put in that's not matched, what our students do, a lot of our students do, is set up a self-directed IRA, and then instead of putting that money into a 401k where you're probably putting it into more mediocre type returns, you're paying fees on it, put that money into a self-directed IRA where you don't have the fees. You have many more choices. It's not, if you want to invest in mutual funds, you certainly can, but you have choices. You have individual stocks. You have the leveraged assets we're talking about. You have the ability to protect your portfolio. You have the ability to participate potentially beneficially when the market's going down or the market's going sideways. Those are all things that are beneficial to you. You might be saying, well, I don't know how to do that. Well, first of all, in your 401ks, 403bs, you're already making the decisions there. And certainly you're not born with the knowledge to be able to do this, but that's a teachable thing. The knowledge is there. We can give you all the knowledge, but then we'll also take it a step further, which is the most important step. That's helping you develop the skills to be able to do this with confidence. And then also have access to help when you need it. And I said when, not if, because at some point in time, you're going to need some advice. You're going to need some guidance and counseling. That's what the OTA, Online Trading Academy, really excels at. We're here to help you. If you need help, if there are issues that you need some guidance on, you have a place to come to get it. You have people to talk to that are experienced, that are here to give you that kind of support.
I'm glad you brought that comment up of people say, well, I don't know how to do it. Of course you don't. You haven't been taught and trained how to do it. I mean, think about when people have children. You don't know how to do it, but you probably go for guidance.
Sure.
Somebody that's done it before, which would probably be your parents, right? So, Al, it's getting close to the show, and a lot of people want to understand more about how to gain more guidance, how to have more confidence in their investing decisions. And Al, there's been a lot going on in this country the past, I say 3-4 weeks or so with weather and just different things that are happening.
Mm-hmm.
And people are getting back to not the usual, but they're getting back to making their decisions, getting back to their normal life, right? And you really help a lot of people with that confidence. And that words of wisdom really helps people with saying, hey, I can do something different.
Sure.
Let's hear some words of wisdom today, and let's encourage people to get started in these markets.
Yeah, one of our goals for you, the people listening, is to level the playing field and really lower the self-confidence barriers to entering the markets, making it accessible to everyday people, not just the pros. There's too many people that live on autopilot and with the same thoughts, the same routine, basically just getting life done. That makes it hard, if not impossible, to awaken and realize your potential. Why not make trading? Yeah, stop. Just keep going. Why not make trading?
Okay.
Okay. Why not make today the day you think and act differently, and give yourself the chance to make a change?
If you feel like you're stuck with that status quo, you got to do something different. And a lot of things that we're talking about, they're not new, they're just different. Same time, same place next week. Until then, retire young, my friends.